Welcome to Business Morning. It's a brand new trading week right here in Lagos, Nigeria. Let's get to the top stories that set your agenda. And definitely a lot of sentiment were driven in these markets this week. Started with the capital raising season. These are things to watch in the market this week. We know it's all about the capital raising for most of these tier one banks at this point. FBNH, UBA rights issue. We know tier one bank FBN Holdings are raising additional 350 billion naira by issuing new shares through public offerings, private placements or rights issues. That's for FBNH. They are targeting both domestic and international capital markets. The rights issue that commences 4th of November 2024 and ends 12th of December and will involve a sale of about 5.98 billion ordinary shares of 50 kobo each at 25 naira per share on the basis of one new ordinary share for every 6 ordinary shares held at the close of business on 18th of October. They also have another tier one bank, UBA, United Bank for Africa. They're raising 239 billion naira through a rights issue of 6.83 billion ordinary shares of 50 kobo each at 35 naira per share. The rights issue gives existing shareholders the opportunity to purchase additional shares in proportion to their current holdings, and it's been offered based on one new ordinary share for every 5 existing ordinary shares held by shareholders as of November 5th, 2024. These capital raises will definitely drive sentiment in the markets this week. Also, we have a bond auction. Federal government is hoping to raise about 120 billion naira. It auctions 2 saving bonds today. The amount is expected to significantly drop about 33% compared to the 180 billion naira raise in October, signaling a slowing down in bond offering by the federal government. Then from a macro standpoint, investors will continue to assess the likely impact of the proposed 2025 budget on different sectors. The government has a large borrowing plan. That could mean crowding out the private sector as well as high cost of capital. Let's get a check on the oil market. Now, oil prices have edged up today after fighting between Russia and Ukraine intensified over the weekend, although concerns about fuel demand in China, that's the world's second largest consumer, and forecasts of a global oil surplus, that's weighing on markets. But that, regardless of that, we see Brent managed to stay up above that $70 range, 0.3% up. WTI still sub $70 this morning, up 0.1%. Russia unleashed its largest airstrike on Ukraine in almost 3 months. That was on Sunday, causing severe damage to the country's power system and a significant reversal of Washington's policy in the Ukraine-Russia conflict. President Joe Biden's administration has allowed Ukraine to use U.S.-made weapons to strike deep into Russia. So we see all of that sentiment there playing into the oil market. So other stories, Dangote Petroleum Refinery is offered to supply 60 million liters of premium motor spirit, publicly called petrol, to the Independent Petroleum Marketers Association of Nigeria weekly, which translates to about 240 million liters monthly. It was gathered from the association that the refinery agreed to give about 60 million liters of PMS to IPMAN members weekly, depending on patronage. This came as it was gathered that the $20 billion Lekki-based refinery is aiming to raise billions of dollars to import crude oil and increase production. All right, now let's get a check on what's playing out. That's for the FX market. That's for the close on Friday. And yeah, it was weakness there. 0.12% down for NFM, closing at 1,652 naira from previous 1,650 naira to the dollar. NAFEX window, 1,666 naira. That was the close, also down 0.32%. So we see both windows there closing in the red. That's for Friday. Other stories, to see the Raw Material Research and Development Council, they're saying that they sponsored a bill currently before the National Assembly, which makes it compulsory for raw materials being exported from Nigeria to have a minimum of 30% value addition. The Director General, Chief Executive Officer of RMRDC, Professor Nayalugo Martins, he disclosed this in Lagos during an interactive session with members of the Manufacturers Association of Nigeria, said the bill has already passed the first reading. They're making significant strides in policy reform by sponsoring a transformative bill in the National Assembly. That's according to him, and definitely it's to mandate 30% value addition to all raw materials before export. And that definitely is a big one. I'll be looking at how it's going to scale other readings for the National Assembly. So our first conversation now is all about plans, spending plans for 2025. I will see as Nigeria's population there is increasing, it's making it more, making spending, by the government. They have to increase spending, going forward. And looking at the 2025 proposed spending plan, we see about 60% in 2025 will be spent on employee salaries, mainly because of the new national minimum wage. Yeah, all of that minimum wage you see from the 70 to 80,000, some state governments paying even higher. All of that is going to play into the budgets for states and for the federal government at all levels. Let's talk to Mr. Ugodre Obichukwu, who's the CEO, Nairametrics, joining me via Zoom. Great to have you on the show.
Great to be here, man. How are you?
I'm fine. So it's another year, another budget, and this time it's over 40 trillion being budgeted for 2025. Talk to me about your first reaction to this number. Does it inspire confidence, for you, for the Nigerian economy?
Not exactly. Kind of sounds like someone told me that it's another Houdini budget. A bit of maybe like a fiction. But personally, it's ambitious in Naira terms. Even though, if you look at it in dollar terms, this is just roughly $30 billion. Not too far off from what we had last year. So in dollar terms, we haven't actually increased the size of the budget. But in Naira terms, we're at 47.9 trillion. But what kind of worries me, Ladi, is that yet again, we are going into another, year of budget that could see us incur a significant or a sizable budget deficit. The budget deficit that we're seeing based on, MTF. By the way, MTF, which is the medium-term expenditure framework, essentially just is a set of assumptions that guides how government plans its fiscal policy over the next 2 years. It's basically done every 2 years. So this time around, the MTF is suggesting a budget of 47.9 trillion in terms of total budgeted expenditure. However, again, revenue is largely short of that. Revenue is just shy of 30 trillion. So we're already looking at a fiscal deficit of about 13 trillion in 2025. Ladi, put that into context. Last year, I think fiscal deficit was about 9 trillion. 2023, when I say last year, I mean this year, 2024 budget. 2023 budget happened to be, I think, one of the largest fiscal deficit we had incurred before now. It was around 11 trillion or so. Now we're seeing 13 trillion. This is obviously record fiscal deficit. And when you say fiscal deficit, for those who don't understand, for the viewers who might not know, it means additional debt that the government needs to borrow to finance the budget shortfall. And going by their plans, they plan to borrow fresh 9 trillion, a combination of course, local debt borrowing and then foreign debt borrowing as well. And then hoping that the likes of the World Bank, or IMF, which we tend to call multilateral organizations, and then of course, bilateral countries, maybe the likes of Brazil or China or India. We just saw the India president visit a couple of days ago, could now chime in the balance. And that's how the government plans, to address its deficit. But here's the catch. I'm looking at this and I'm seeing, oh my God, in this particular budget, Ladi, debt service alone is going to go up around 15 trillion. 15 trillion naira on debt service alone. That used to be Nigeria's entire budget for a year, but we're doing 15 trillion already on that. Now, compare that to capital expenditure, which is about 16 trillion, and then compare that to recurrent expenditure of 14 trillion. So you see that as much as we continue to do deficit financing, our debt numbers continue to balloon, and the cost of servicing those debts never get cheaper, Ladi.
We know, debt is not bad, in itself. And the thing about it is, that debt you're taking, right now is a dent on your future earnings. And that's why we're not going to have enough to spend with that kind of debt servicing number of about 15 trillion. And we got the inflation numbers last week. That was Friday. It's higher again. How are you seeing this impacting inflation, going into 2025?
Well, interesting thing is that I was looking at the numbers right on my screen here. When I was looking at the MTF, they claimed that they are projecting inflation rate of 15.75% for 2025 and 14.2% for 2026. And then I look at the other assumptions as well. They're saying $75 per barrel for crude oil price, which is fair enough. Of course, bear in mind that Donald Trump presidency is already looking at, they're going to push for lower oil prices. But let's even assume $75 dollars per barrel is fine. And they're pushing for 2 million barrels per day in terms of crude oil production. We're nowhere close to that at the moment. In fact, OPEC quota for Nigeria, if I'm not mistaken, is around 1.5 million barrels per day. So it looks like the projection is quite optimistic. And then you now throw in inflation rate of 15.75. It just doesn't kind of augur well. Inflation rate for today is closer to 34%. And so you're suggesting that by the end of next year, inflation rate is going to basically halve. I really don't see how that works. We can come back here a year from now and then we'll look at whether it's correct or perhaps wrong. But Ladi, I don't see how we're at inflation rate of about 15.75%. So you kind of look at these numbers and you say, well, you know what, at the end of the day, this is just MTF. By the time they roll out the final budget, maybe some of these assumptions might have changed. But as things stand, it looks more like Houdini to me.
All right, and maybe, we can add prayer, to get some of these assumptions, going forward. But, talk to me about monetary policy now. What are you expecting for the MPC? We have the last meeting, for this year. How do you see all of this playing into the decision?
I mean, not an easy job for the folks at the Monetary Policy Committee. I look at this, I read their minutes to their meetings all the time, and you could see that they are basically battling, with the tools that they have to try and salvage what it is of an economy that is, going through dire straits. And so the only tool that they've had essentially is to continue to raise interest rates. And as much as, the wider economy doesn't like it, especially manufacturing sector don't like it because of what it means for borrowing costs. But that's essentially what the CBN can do. The CBN cannot cannot intervene like, the CBN under Emefiele was intervening. They don't even have the bandwidth for that at the moment. So that's definitely not going to happen. So I do expect to see moderate increase in interest rate when the MPC meets. I know some might think, look, how much more can they take it up? It's probably going to be flat this time around, but it definitely is not coming down. I think if you look at the inflation numbers, it kind of looks like everything was ticking up. And I don't think the inflation numbers is fully reflected yet. It's just reflected a portion of the increase in fuel prices that we saw in October. But we know that fuel prices have even become a bit higher in November. Prices are likely also going to inch up higher as we approach the Yuletide season. And so, and then this is the last CBN MPR, and so MPC meeting before the next one, maybe likely in January or early February. So it will be strange. I'll be surprised if they lower rates or if they even keep it stable. So I do expect to see moderate increase. And if I'm gonna wager, I'll probably say 25 basis points might just be what what the central bank might do.
Right.
It might be unpopular, but it looks like that's the best decision in my own opinion.
Right. I do envy, most of the other central bankers are already cutting, by 25 basis points, but we're looking at hiking. Well, thank you. Always great having your perspective, Ugedre Obichukwu, CEO, Nairametrics. Thank you so much.
Thank you, Ladi.
All right, we'll take a break now. When we come back, more conversations and what to expect for these markets. That's in a moment. Do stay with us.